Hello and welcome to another update video about KAVA. It's been requested by a few people because obviously it's performing quite well while other coins aren't. It's one of the coins I covered that pretty much early in January, and so far the forecast worked out. I mean, we're now revisiting it basically 2 months later. I haven't changed the chart at all. I haven't moved a single wave. At the time we talked about either to get from this point a fourth wave to the upside, or, and that would have been the more bullish interpretation. Let me just double check that if I draw that correctly. Yeah, from here to get a bullish breakout. Yeah, there were two things. We were directly at the 78.6 retrace in the last video, and we said it would be likely to see either a wave 4 bounce or actually a more bullish breakout. At the moment, I'm counting this primarily as a wave 4 bounce. Why is that? The reason is this move up doesn't look like it would give me a lot of confidence, but what I can imagine is that we're putting in a high wave 4. Yeah, we don't really have the structure in this move. Yeah, it's not the solid structure, so I'm missing that, and it could turn out to become a three wave move. Looks fairly likely, or at least not unlikely, to get that move, especially as long as we're holding here the the last low, basically the intraday low. No, by the way, that is the low from the 3rd, 4th of March. Yeah, we talk here about 75.5 cents. As long as that level is holding, we could focus here on higher in a fourth wave. I'm gonna talk to you why, but it's not a chart that I trust long term. Yeah, it moved up in that was back in 21 in either a WXY structure, which would be bearish or at least unclear, or in a 1, 2, 3, 4, 5 pattern here, but it would be a leading diagonal. These are the two counts. Yeah, green would be the bullish one, yellow would be the even less clear one. Now with the leading diagonal, which would be the green count, it would then count as a wave 1, and the move down wouldn't be a 1, 2, 3, 4, 5. It would just be an ABC. In this ABC, yeah, this would need to hold, and it would now really need to rally impulsively. So it's not the worst of setups, because we can count a leading diagonal, but I would always, if I'm looking at charts and I see some charts that are impulsive, that have a long chart history, and then I compare that with a chart that has a leading diagonal, which always needs proof, and you only get proof by coming down, holding a wave 2 support, and then rallying. So basically this as a wave 1, the move down as an ABC in a wave 2. That gives you proof. 78.6 fib level was good reward to risk, because below that level it would have probably broken completely. And then this could now be a rally in the third wave, you know. But is it, right? And that's what we don't. The problem is, if you have wave 1 as something nebulous like a leading diagonal, yep, it's rather unclear, but we've got that bullish potential. Yeah, I mean, against the low of the 4th of January, yeah, the 50 cent level, you know, either way, you know, that there was upside potential in a fourth wave, but also in a more bullish count. But the problem is, again, with these counts, that you can also count as a corrective pattern to the upside. It's unclear, yeah, and that's the problem from an Elliott wave point of view. Now you can still trade the lower time frames. There was a setup there. It's just not it's just not the most reliable long-term setup. Okay, so okay, let's look at this, and if we say, okay, the move up looks okay, possibly impulsive, but more like an A wave, doesn't really give me the clear feeling of a proper impulse. Yeah, I'm smelling an ABC structure here. Now again, it could be wrong, but could very much be that this here was the A wave, this was a B wave, now we are coming up in the C wave. What would be the target for such a wave? So let's draw the fibs here. 50% fib would be the maximum. So if I'm looking at these, so we've already reached basically the zone between the 23.6 and the 38.2 fib. Yeah, here between 90 cents and 128. So a C wave could take it. So I wouldn't be surprised for the C wave to test 128. And then 171 would be sort of the maximum. Above 171, we can turn a bit more bullish, but it wouldn't necessarily be super confidence. But yeah, the 50% fib level is certainly a relevant one. The ideal target for a fourth wave is the 38.2 fib. Okay, so just bear that in mind as a possible target here. Now, how low does this B wave, or how low is this B wave allowed to go really? Ideally, it should not go below the 78.6 retracement. Now it has come down to the 50% fib. That's fine. I don't want it to go below the, we'll be there, 60.5 cent level. So if we drop below that level, I'm not trusting this anymore as a B wave, and it will probably completely break down. But this looks actually like a nice corrective move down. So I'm smelling a B wave here and a possible C wave to the upside. If we break out of this, you might call it a bull flag, or something like a descending broadening wedge. They can break out to the upside. Actually more likely than not. And if we see a break above the trend line, that could unlock that C wave to the indicated targets. First target normally of such a wedge is the top of the range here, or the top of the wedge, which would be 114, 115. And then the wider target, then we talk about 160 here, structural resistance. Or if we look at, again, just the wave 4 target, we're talking here about 169, which is pretty much close to 160. Okay, that's my update about KAVA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.